Hello, this is Andrew Thake from Minds and Money, and today I'm joined by Juerg Kiener, Managing Director and Chief Investment Officer of Swiss Asia Capital. Delighted to meet you, Juerg.
It's been all my pleasure, Andrew.
For viewers who are unfamiliar, can you tell us a little bit about Swiss Asia Capital?
It's a company which has been around now for just over 20 years. We started at the end of 99, 2000, and we looked at the world and we're looking where we would expect new cycles to materialize. And so one of the areas we were choosing at the time was the resources space and the precious metal space for reasons of supply problems in the industry, as capital was really hard to get. All the money went into Nasdaq, and we had the Nasdaq boom, and the mining industry was starved of money. And so we created a cycle where the shortage of capital meant sooner or later shortages of supply, and prices were really low, and you could basically buy assets at a fraction of replacement value. And I think the cycle has repeated itself then again in 2008, 2014, 15. And I think right now, I think 2000, probably 21, if I look around how we see certain prices, it's actually very similar to that stage.
So you think that this current cycle is quite similar to previous ones. Where is it different?
I think where it's really different is the inflationary side. I think we are looking at this time at much more inflation, and it reminds me more on cycles which we experienced mid-70s, late 70s, where inflation was picking up, and we had similar stories. The supply couldn't cope, but we had inflation. And I think what we see today as well, probably for the very first time for many people, because look, I think even I only started my career as a full-fledged member of the society in 1978, but I started in 1975, so 78. So I would have just heard about the tail end of the inflationary structures coming through, but for most people who are a bit younger than me, they would have always seen that this inflationary cycle. They would have never really seen an inflationary cycle coming through the door.
And what's your view on gold at the moment? Are you sort of like bullish, and can you give us like an insight into your thinking?
Look, I think there's a lot of people who are looking at gold and as a kind of store of value, and I think that has never really changed because gold is growing from the supply side by, let's call it 2% a year, and our costs are probably growing about the same level. So basically, we are pretty much neutral. And your debasement of money is a multiple of that. And so when you actually look at gold and silver and you go back to 1970 or even 1950s, it costs you the same amount of money to buy the same type of car today than it cost you at that time. So it's a store of value from a certain point of view, which works beautifully well in inflation, stagflation, and deflation. The worst market to be in these two areas will be in disinflation. And so if you still believe you're in disinflation, don't even think about touching it.
Okay, and then linked to that, last year silver outperformed gold. What do you expect to happen this year?
I think there are a few other things. We don't just have a monetary and a fiscal structure which are coming through, and political structure which is coming through. We have as well a change in economic behavior, and cycles always are defined by government policies. And if you looked around the world today, the policies which we have today is the world is dirty, let's clean it up, let's go green. And so if you want to go green and you want to become more technological, you want to get better interconnected, I think some of the key issues which we require as a transmission is silver. It's in every single thing you basically touch today. I think we couldn't have this conference call today without any silver components, whatever we use. And what we are looking at is that the screenification means that the silver demand from the industrial point of view, which goes into all this application, will increase significantly. So what we had in late 1990 was the collapse of the film industry. Right, so your Kodak moments and all that which needed silver disappeared, and we had a few hundred million ounces of silver demand disappearing. I think it's now the silver demand which we see coming back through electric vehicles, through all this green stuff which we are building. And it's this demand now which is actually start creating demand at a time where our supply is actually horrifically falling. I think if you look for the last 4 or 5 years, every year we used 100 million ounces of silver in inventory. And those inventories, I think, have more or less been used up and rehypothecated. So it's going to put pressure on higher prices.
You've touched on a few things that I'd like to sort of pick you up on. You mentioned the sort of green economy and ESG. How is ESG impacting the mining industry, and how does that impact you and the approach that Swiss Asia Capital takes?
I think it's really interesting, and you know, ESG has been around for the best businesses for a long time already. I think you look after your stuff and make sure you have business plans in line for growth and how you can bring these people along. Now, since we had COVID, ESG became a much more important world, particularly the mining industry, because as you know, a lot of the miners are producing in countries which you might call third world.
Yeah.
Some of the mines in the middle of nowhere. There are no hospitals, there's no food supply distribution. So all of a sudden you have a COVID attack with a virus going around. And in that environment, I think for a lot of areas, we've seen that miners were actually the frontier people bringing solutions to the problem, from medication, from hospitalization support, from food supply, from vitamin supports. And so you could actually start seeing that a lot of miners were much more proactive in actually being able to keep COVID out of their mines, because they were worried that if they would have COVID in their mines, they would get shut down. At the same time, they were actually looking at how can we look after the society where our mine is living in and keep making sure all of them are okay.
Yeah.
So to me, that's the first step of ESG, next to whatever else people say, low footprint, better quality stuff, or refixing the environment as we leave the mining site and put it back into original stage. I think all this environment become much more important, but I think they should have been important anyway. So for us, it's never been a material change. And I think I'm worried a bit today when all miners have now ESG on the first 6 pages of the presentation. The question is, what are you really doing and how are you converting it? And in order to do that in a very good way, you need miners which have good profit margins, so they have some money to spend to look after their people.
Yeah. When you are speaking to miners, what sort of questions do you ask them to then dig down to work out that ESG isn't just something that's in their mission statement and they're kind of just putting it in there for like window dressing rather than they're actually actioning and doing on the ground?
I think it depends a bit on which stage of the mine you're looking at. You know, is it in exploration, development, or already a running mine? I think if it's a running mine, it's quite easy to see what they're doing. You can see it on their orders. And so if you look at, let's say, an iron ore mine, their fleet gets replaced every 18 to 30 months. The life of a truck which runs 24/7 is probably 1.5 to 2 years. So if you know that you have to replace your fleet every 1.5 to 2 years, you actually already start seeing the order book coming through what do they order. And you see now miners which are already having order books which are incredible about electric vehicles, underground installation structures which are running like that. We've been in mines where the mine sites were done with drones instead of having people traveling around the world. That sounds like a marketing gimmick. It's probably as well. But you can see that a lot of people are starting to look at different ways to optimize their mines and become greener.
And where does nuclear energy fit into the green economy?
That's look, I think if I talk about the green economy, what does the political framework really call green, right? I think that's maybe a very, very good question. And mining has never been a green activity. We can make the activity greener, and the less earth movement we have, the greener we become. The more water we can recycle ourselves, the greener we become. So I think to me, it's about being the best in the industry, in whatever industry you are. I mean, you know, it's misnomer that you can basically not use any energy to produce anything. Right? So if you look at nuclear, the biggest problem is disposal. And I think we become much more professional and in how much energy we can produce and how big these installations have to be. But the disposal, I think, is going to be the major problem which we're still going to face. And from that point of view, we haven't received many answers, but it's considered to be now in the green bucket. And so the market will pick it up because the green bucket will decide what your credit costs are. And lower credit costs means higher valuations by default. But if you ask me personally, do I think it's really green? Probably the answer is no. Can you have a smaller footprint in a uranium mine with less damages for the environment? Yeah, probably. So you can probably say, okay, I'm in my top end of that in the green zone. You could say the same about coal. Right? I mean, if you look at coal, you can have hard coking coal, which you're going to need for the steel production. You want to shut down now the whole coal mining business, then you wonder how you're going to live, right? It doesn't quite work. But I think the issue is how can we actually be in an environment where our impact on the government is the least disturbed. Let's put it that way. And so uranium might actually be a solution if you find a way to dispose it appropriate.
Sure. Has the nuclear energy recovered from Fukushima? I know that was like 9 years ago, but has the industry really recovered from that yet?
I think if you look at the big chunk of the Western world, I don't think it has really fully recovered. But you see a new wave of buildup of nuclear power stations actually evolving. France, I think, is looking at expanding. But if you look at emerging economies, I think, we've been during this whole period actually expanding and growing. And I think China is probably on the forefront of all of that. And even Japan is coming back to the market. So I think if you want to go really green from a point of view of usage, then maybe you have to say, okay, nuclear has to be part of the mix.
Yeah. When I was living in Asia, and I lived in Asia for 13 years, 11 years in Singapore, where you're based, and then about sort of 2 years up in Hong Kong, China was the key driver when it came to commodities. What is the future for China?
For all commodities or nuclear in general?
For all commodities.
So if you look at the world, go back 1990, then you would have thought China made up about 20 of global trade, and the US made 70-80% of global trade, and today it's the other way around. So you know where all the commodities go. That's where industrialization is happening, where your manufacturing takes place and your trade takes place. So we're becoming much more focused on what China is doing. And if you look right now with the One Belt, One Road structure, which is actually expanding in a very fast speed, and with the collapse of Afghanistan, is even accelerating further with the integration of Pakistan, India, and going to the Middle East. So you see the whole corridor getting developed. So China will continue to stay one of the most important drivers for that in development. The question, will everything be within Chinese borders or within that belt? And I think what you've seen in the manufacturing side, we've been outsourcing a lot to Vietnam, to Thailand. You're going to see the same with other products which are going a bit slightly higher on the food chain, that you're going to see the same happening there.
You mentioned earlier on in that conversation about supply chains and also broken supply chains. Can you just give us a bit more of your insights into how supply chains have changed in mining over the last year, and what that means for you as an investor?
So particularly when it comes to the green economy and considering what happens around the world, where we think we are in a world which is deglobalizing, you actually have to believe that if you deglobalize, that you will start now rethinking your business plan. So what we hear from particularly the car industry is, we have now a North American center, we have a European center, we have an Asian center. That means you have 3 different type of industrial sites, and you try to accommodate that you have your supply closer to home. You have larger inventories on your site, and these inventories are coming from refiners and miners around closer to home, not around the world anymore. So the whole supply chain from shipping is changing, the way I invest money is changing, and you see that actually now that If you're today Toyota or a Japanese car manufacturer, you're going to need zinc for your production. You're going to ask your major refiner to actually rebuild that inventory and the supply chains of deliverables. So Tahoe Zinc is one of them, and they will go out and they will do offtake investments, equity investment, financing investment, all through government low credit guaranteed debt. And you see the same happen now with the critical minerals in the United States. In Europe, we are still a bit behind the moon, but probably waking up slowly but surely, at least what we've seen. So you're going to see the same evolving too. So we had just yesterday a phone call with a miner who's looking at expanding that structure. And so you start seeing that all the component within that, from miner to end user, are all interested in making deals because it brings them more stability. It means less risk. It means as well more controllable cost. So a friend of mine is in dye. He's doing dye for blue jeans, high-end blue jeans, which cost $200-300. So in order for him to be able to get a deal nowadays, he always needs a boat on standby. So instead of having one boat, he has now two boats, one which is on the go and one which is on standby. So in today's world where shipping costs are going astronomical, means your costs are going up and start eating your profits away. So then you've got to start thinking, how can I change my business model? I still want to ship my stuff from Asia to Europe because the European customer comes now and say, oh, you have to absorb some of these costs. So you want to start rethinking how you work. And we see that actually in many, many things in what we do. And we talk to many companies which are in all type interlinked in this chain. So we see these huge changes, which means you have to rebuild somewhere before you shut down the other side. And that means you have this location for probably much longer to come because it's like you build a new chip factory. You're not going to you can do that in 6 to 12 months, but can you teach and train sufficient staff in 6 to 12 months? The answer is probably not. It might take 2 years. And that's what we mean. This location will take longer than people think. It's not just tomorrow we have no COVID and all boats will be on the sailing list anymore and everything will be go back to equal. We're changing the world the way we operate in because we want not to have the same risks anymore.
And looking ahead to 2022 and beyond, if you had to pick out a couple of mining or commodity investment trends that you think will become more important, what would those be?
I think, aside it's greenification, but how do you play that? For us, it's I want to be an ultra high quality product, high grade, high profit margin. That means maybe it's a smaller entity, but a lower footprint. So it comes quicker to the market, but it can be looked after easier. So I think that trend is one which is to stay. It's not necessarily a particular mineral, but if you look at anything which goes into green space, that's probably the highest demand curve. So all of them have about the same supply problem. So you want to be there where the demand goes up and the supply struggles to catch up. And basically seeing how you can actually create additional value without having to throw much more capital at the problem.
And one commodity that we haven't mentioned in this is copper. Are you bullish on copper? Because obviously it is part of the EV investment thesis.
Look, it's if you look at electrification, it's for the time being still probably the number one thing to have. The copper mines have one disadvantage. In general, they are big, they're large, and they take ages to build. But if you look at the largest copper mines, they take 5 to 7 years to set up. And you already worked 7 years before you start actually building that up and ramping them up into full production. And then you might have them for another 20 to 40 years. So that's really difficult. There are not that many monsters around anymore to build like that. And most of them have problems. So you start looking at smaller ones, which are quicker coming to the market, having quicker benefits. So if you look at around the world, we don't really see how the supply will be met. There's just not enough money which has been spent. If you think the gold and silver space had a capital investment cycle starting about 2 years ago, copper and lithium started about this year, nickel. So you want to be actually in an area where your supply side will lag much longer. And so copper will certainly be in the forefront. And as you know, copper in a clean form with high profit margin is hard to get. I think everybody's looking at that. You can ask every single trading house and trader and investment company, and they all struggle. But that's true for almost anything which is quality, right? It's I think if you look at quality in jewelry or clothes, I mean, you always know it's a small fraction of the whole pool which actually meets that area. And if you look who has a profit margin, it's always the same people. It's the top end. So you want to be in the top end. It doesn't really matter too much which mineral you're in right now, but certainly the green areas are the ones which are probably will get the most focus. And next to having a focus from an investment point of view or industrial point of view, think about the financial community, which is now rubber stamping what's green and not green, and which have a green credit rating or not a green credit rating, which makes a difference in funding cost. So you want to be there where the money has the highest concentration. And you see that in the financial market anyway, you have a total bipolar investment world where money flows into very few pockets, and these pockets explode, and then maybe they get a bit too high and they drain again. So, but that's how financial markets work nowadays. Too much money chasing too few goods.
Well, look, it's been an absolutely fascinating interview. We could have carried on for much longer, but we're out of time. Thank you very much. That was Juerg Kiener, Managing Director and Chief Investment Officer of Swiss Asia Capital.
You're most welcome, Andrew.